Are you still waiting to save up 20% before you buy a house? That smart advice might be killing your home ownership dreams. In today's market, saving for a massive down payment could cost you more than you think. So let's bust that 20% myth wide open. The 20% down rule originated way back in the day when your parents were probably out trying to buy a house. If you do not have 20% of the purchase price of the home to put down, then you're going to have what's called private mortgage insurance. Okay? Now, back in your parents' day, you couldn't buy a house if you didn't have 20% down because they didn't offer the private mortgage insurance. Then a company came along and said, you know what? This would be a great idea because that way you're helping the bank to make loans to people who don't have 20% to put down, and we're going to make a little money on it too. So if you don't have 20% to put down, you're going to have to pay the private mortgage insurance. But if trying to save 20% to put down on a home, you're just delaying buying a home, and home prices keep rising, you're basically shooting yourself in the foot because you're aiming for a moving target. Okay? Now we have loan types like FHA that will do it with 3.5% down payment. You have conventional loans that will work with just 3% down payment. If you're a veteran, then you can get a 100% mortgage. And if you buy in a rural development eligible area, you can also get 100% financing. So there are options out there now that you don't have to have 20% down payment saved up. Am I saying you can buy a house with $0? Absolutely not. Because whether you have to get some type of financing, whether you need the down payment or not, is irrelevant. You're still going to incur cost along the way. But trying to save up 20% on a $350,000 house may seem a little overwhelming right now. So with rising home prices, you're losing out on a shot to buy a house when you keep trying to save that 20% down. Stop waiting for a perfect condition. Stop waiting and saying, well, I need this amount of money in order to buy the house that I want. You need to look at what you have and what you're going to be able to get for that amount of money, because once you buy a house, then you start building equity on that house. The longer you're renting, the harder it is to save money to get into the house that you want.